Opendoor stock is back in the spotlight, and this week could be one of the most important moments in its recent history. After closing Friday at $2.10, up 14% on the day, and showing some strength in after-hours trading, all eyes are now on what happens at Monday's market open, and more importantly, what to expect when the company reports earnings after the bell. There's a lot building under the surface: renewed retail interest, a ton of shorts still underwater, and early signs of a housing market that might just be thawing. Whether you're already holding shares or just watching from the sidelines, this is a setup worth paying attention to. Let's start with where we've been. About 2 weeks ago, Opendoor had one of its biggest one-day rallies in recent memory, climbing more than 30% intraday and lighting up retail message boards. Since then, the stock hasn't just faded away. It's consolidated, held key support levels, and now we've seen that renewed momentum again, especially with Friday's double-digit move. That tells us something. This isn't just a one-off pop from a Reddit rumor or a short squeeze gone wild. This might actually be a trend forming, a setup where investors are quietly positioning ahead of a bigger catalyst. And that catalyst is coming Monday after the close. What makes this moment so interesting is how much is aligning at once. We've got improving sentiment around the real estate market. Mortgage rates, while still high, have begun to stabilize. In some regions, they've even edged lower. That helps affordability. It also brings some buyers back into the market, which is exactly what Opendoor needs. Their model depends on buying and selling homes quickly and profitably. They don't need a red-hot housing boom, just a functional market with decent turnover. And we might be getting there. Add to that the fact that Opendoor has already done a lot of the heavy lifting internally. They've cut costs, right-sized their inventory, improved efficiency, and narrowed losses over the last few quarters. If earnings on Monday show that those efforts are paying off, and if we get even modestly positive guidance for the next quarter, then suddenly, the story starts to shift. You're no longer just betting on a speculative turnaround. You're looking at a real company with improving fundamentals in a stabilizing industry. That changes the game. Now, let's talk about what to expect Monday morning, before earnings even hit. The pre-market session could tell us a lot. If we see a gap up on decent volume, especially above $2.10, it would signal that traders are preparing for upside. That kind of price action often precedes a bullish earnings reaction. On the other hand, if the stock fades in early trading or breaks back below $2, it might suggest some hesitation or profit-taking before the report. Either way, Monday morning is the first big moment in what could be a very important week. The bigger question, of course, is what happens after earnings. Analysts aren't expecting a miracle. In fact, expectations are relatively modest. Losses around 3 or 4 cents per share, maybe a slight improvement in margins. But that low bar is exactly what makes this setup so compelling. If Opendoor comes in even slightly ahead of expectations, it could surprise the market. And with short interest still hovering around 20% of the float, that could be enough to spark a squeeze. Remember, a lot of those short positions were added when the stock was down near $1.50 or lower. At Friday's close of $2.10, many of those shorts are already in the red. A decent earnings report could force some of them to cover. Add in retail traders looking for the next breakout, and you've got the ingredients for another big move. And let's not overlook the fact that Opendoor recently regained compliance with NASDAQ listing requirements, avoiding a reverse split entirely. That's no small feat for a company that was trading below $1 not that long ago. When a company scraps its reverse split plans, it usually means management believes the stock can stay above the threshold naturally. That sends a signal to the market: confidence, stability, and a belief in their own trajectory. It's not the kind of move a panicked leadership team makes. Retail sentiment is also ramping back up. Opendoor has been trending again on Reddit's Wall Street Bets, on StockTwits, and on other retail-driven platforms. And this time, the chatter isn't just about memes or momentum. It's about the company's improving fundamentals, the potential for a real turnaround, and the idea that this stock might be misunderstood. That's a much stronger narrative, and one that's easier to sustain if earnings deliver. There's also a technical side to this story. If Opendoor opens strong and pushes through resistance around $2.25 or $2.50, we could see a breakout toward $3 or higher. That $2.50 zone is key because it's been a profit-taking level before. If the stock can clear it on volume, it suggests real conviction behind the move. And once you get through that zone, things open up pretty quickly. At that point, a combination of momentum traders, short covering, and retail excitement could drive the stock much higher than most people expect. Now, of course, none of this is guaranteed. If earnings disappoint, if the company misses its already low expectations or delivers weak guidance, then we could see the opposite. The stock might pull back sharply. That's the risk. This is still a volatile name, and the housing market remains uncertain. But if you're looking at the setup objectively, there's no denying that this is one of the most interesting stories in the market right now. So what's the play? If you're already holding shares, Monday morning might be a time to watch closely. If you're looking to start a position, pay attention to the open and early volume. If the stock is strong out of the gate, it might be a signal that traders are betting on good news. But if it weakens quickly, that could be a warning sign. Regardless, having a plan going into earnings is crucial. Know your entry point, your stop loss, and your exit strategy based on different outcomes. This is a stock that can move 10, 20, even 30% in a day when momentum kicks in. As we head into Monday, the stars are at least partially aligned. Improved sentiment, stabilizing market conditions, high short interest, a strong technical base, and an earnings event that could flip the script. The setup is there. Whether Opendoor delivers is another story, but we won't have to wait long to find out. Let me know what you think in the comments. Are you buying ahead of earnings, waiting for confirmation, or sitting this one out? If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any of the post-earnings reaction videos coming your way. Thanks for watching.